Hi guys, so welcome to today's session where we are going to be discussing processes around ERP. So we can pick on any ERP solution and we explain a particular process to you. So today we are going to be looking on how to borrow stock from external parties. So external parties could be friends and family, could be your competitors. So it depends on what you guys agree on. So the agreement is that, oh, I need this so stock of products. Borrow me so I can make sales on it. When I receive my stock, I can return it back to you. You understand? So it is a very simple scenario like that. So in situations when we talk about stock transactions, so that aspect alone is only called stock receive or receive stock. So you are receiving stock without a purchase order or without a supplier. What you are only receiving, what you are doing is that you are borrowing that stock. So no supplier is involved. You understand? So the only thing is maybe from your friends, your family, your competitor that you are within the same business. You understand? But the essence is you just want to borrow that stock, then make sales on it, then you return the stock maybe when you receive your major stock. So it's just an agreement between both of you. So my name remains Olumide Aino. I work with Pinmetrix Limited. So let's go into the process today. Now, there are things you need to take note of before you can actually bring in these things. So we need to also monitor the ledger transactions of it, which is the accounting aspect, the accounting entries of this particular transaction. As simple as it is, there are still some accounting transactions that goes in between. So we'll see, we need to create the ledger account, make sure that you have a ledger account available. Then it might be important for us to also have a warehouse. Now, depending on the time being, the period of time whereby these products are being borrowed. So you also need to have a warehouse that you are taking this product into, and maybe you are making sales from it. For instance, I can have 2 or 3 people that I borrow this product from. I'm going to use the example of one of my clients, which is Henico Global. So Henico Global has this kind of process. You understand? So, and they have 2 of their maybe competitors or friends, whereby they go and borrow some stock of LPG, which is the cooking gas. They borrow from them. So we have things like we have competitors like maybe One Gas and as well 4D integrated service. So these competitors also borrow from Henico Global as well. So there are 2 scenarios we are going to be looking at. We are going to look at the aspect where you can borrow from your competitors or your friends. So I call them external parties. At the same time, how do you also treat the aspect where they are supposed to also borrow from you in that situation? So like I have said, we need a ledger account, then we also need warehouses. So these warehouses would have to specify for each of the parties that are involved. Yeah, for instance, One Gas will have its own warehouse. 4D integrated will also have its own warehouse. You understand? So with that, it is easier for you to actually know the movement of stock that comes in and how it went out. You understand? So at that point, you can actually pull any type of report regarding that situation. So let's go into the scenario. So now I have the ERPNext open. So I'm going to be searching for chart of account. Let's check for chart of account. Let's see the account that are represented on the chart of account in this scenario. So I'm going to be using the training platform. So if you look at this now, let's look at the aspect whereby you borrow from them. You are borrowing from them. So it is between your stock and another account. So please don't quote me in this situation. It depends on what you agree with your accountant or what your consultant also what you discuss with your consultant. So your whole process might be a little bit different from what I'm trying to explain here. But in a real situation, what is supposed to be affected is because you are borrowing stock from outside. So definitely your stock account needs to be debited. Yeah, then you should have another liability account. So the account type is a stock account to be debited, and the liability account, which shows that you have borrowed something. You understand that scenario? So this is what we are going to look at here now. So since I'm borrowing the stock, so let's look at this. So first is let's look at this. So stock of Calabar LPG is going to be debited when we receive the stock. That is when we collect the stock from our external parties. Now, let's look at the other account, which is your liability account. So your liability account, as at this point, you can see it is stock received from somewhere. So this account will then be credited depending on what's it called? The party that is involved. That is either your competitor or your friend, depending on who is involved. So why we splitted this is just for us to make the reconciliation easier. So we could as well have a single GL account that will have all those transactions all together, depending on your process and depending on the volume of transactions that are actually involved. But in our situation, we want to be able to reconcile stock easily. So we decided to have them splitted like this. At the same time, what if you're supposed to receive, you're supposed to give the stock to them, not returning now. Please take note. You're supposed to, maybe, yeah, even if you are going to return, so it is just the reverse of whatever that has happened when you borrowed it. So this time around, when you are returning the stock to them, that is the stock they borrowed you. So at the same time, it's the same ledger account that will be involved, but it is now the reverse. So like the other one where we had to debit the stock account, this time around, because you are returning, so you have to credit the stock account, which is the same Calabar LPG. So we are crediting that stock while we are debiting the liability account, which is this. You understand? So these scenarios will definitely happen for processes like this. And also, it is good to also note that when you are borrowing stock into the system will definitely, because you are receiving stock, the system will definitely ask you for the cost of the product you are receiving. Yeah, so there must be a unit cost price. So that depends on you, on what you want your cost price to be like in this situation. But we need to have a cost price, because it's the same cost price that the system would use for your cost of sales when you want to make sales on this particular product. So it is actually very important in that case as well. Now, remember you had some available stock within the system. Maybe you had just 2 and you just want to borrow more and all that. So except you have a zero balance, that the same cost that you have received with, maybe when you now purchase your home, you can now return. Now, when you are returning, it doesn't actually mean that it will be the same cost when you are returning. Please take note of that. It is not, does not depend. It doesn't matter that it is the same cost. So depending on the costing method that you are using. So for instance, if you are using a weighted average, and you are sure that the costs that are coming is constant. So for instance, you entered the system with 2 naira, 2 naira, 2 naira, 2 naira. So even when you borrow the stock, you borrowed at 2 naira, 2 naira, 2 naira. When the new stock came, you received or you purchased the new stock at 2 naira. So that same 2 naira. So when you are returning the stock, fine. When you say 2 naira, when you return, the system will actually use 2 naira, because even with weighted average and everything, the cost has been constant all through. But in a situation whereby you are using a weighted average, or you might be using any cost, but you have received your first inflow with 2 naira, another inflow with 3 naira, and you have not consumed each of the quantities on this particular item. You understand? And you now receive another maybe 7 naira. You understand? So that situation, that's what I'm talking about. So when you are returning it back, so you must also be able to compute that manually to check if the system has computed it properly. But for ERPNext is going to compute it seamlessly, so you don't need to worry yourself about that. So that is why even if you make mistake within it, it is the same mistake that the system will take. The system doesn't know if you have made a mistake or not. So you need to be careful when you are dealing with your stock. So don't let us derail from purpose. So let's see. I've been able to explain how to return the ledger account when you are returning your borrowed product. What if you also borrow? What if you are giving to your external party? Of course, because of the kind of mutual agreement between both of you, they can actually come and say, "Oh, please, can you borrow me this so quantity and that?" And it's an agreement between both of you. So in that situation also, because you are borrowing to them, you are giving to them, definitely your own stock is reduced. So which means the stock control account is credited. You understand? It's credited. But you have to debit a particular ledger account. So it could be, you could have a receivable. On the normal day, it's supposed to be a receivables control account that you are actually debiting. Explain that this person is supposed to return this particular product to you. But in our own case, we have an account for that. So still on that is going to be under current asset. So if you check the current asset stock, we believe we still have the stock, but we just borrowed it out. So why this is credited, we have this ledger account that acts as a current asset account, and this is debited based on how the product is being exchanged. So even though your external parties are returning this product back to you, please take note of the word return. When they are returning back to you, it means that these will actually be credited. The value here would have to be credited against this because it's coming back into your stock. So this will be debited again. So that scenario is closed. You understand? So what if it is a scenario whereby you borrow, or let's say you trade products, You understand? Maybe you trade products. So the best scenario is for you to follow the same process I've explained. So just think about you receiving and you giving out the same product. You understand? So I think that will be that for now. Hold on, let's move to the next. So let's look at the next one that is actually needed as a prerequisite in this scenario. So the other one is our warehouse. Let's check our warehouse. Warehouse list. Let's check our warehouse. So we have the warehouse, which is the 4D integrated plant and one gas plant. The reason why we are having this is because we want to actually show how the movement came in. So how the movement, so rather than we just modeling everything into the general warehouse or location where we make our sales from, we want to be able to monitor it based on each parties so that it is actually easier for us to reconcile when the need be. So we've been able to do that. Now let's go to the transaction in proper. Now the first one we are going to look at is how to borrow stock from external parties. That is discussing with our external parties and telling them, oh, please, can you give me this so quantity of products? I'll return it in 2 days time, 3 days time. It is an agreement between both. So now the process is easy. So all I just need to do is to go to my stock entry. So I go to my stock entry. Now I go to the stock entry, then click on add stock entry. So this aspect allows you to receive stock. Now I need to change this to a training purpose. I need to change this to training. So then also maybe I need to change the date. That is the date when the transaction actually took place. Let's assume it is today. So if it is today, I may not edit this, but if it is not today, maybe tomorrow, no, not tomorrow, rather, let's say yesterday, 2 days ago, 3 days ago, a week ago. So I can actually edit this and pick the date. Then I can actually also select the time if I wish to monitor the time whereby that transaction was actually done. So I'll just put today's date here. Let's assume it's today. Then the stock entry type. So this is more like a transaction type. You understand? This is more like a transaction type. Now, what we are trying to do is to receive the stock. So there's a difference between this and purchase receipt. So you can see material receipt. So there is a difference between material receipt and the purchase receipt. So you can watch my previous video on how to do a purchase receipt. But in this situation, it is a material receipt. So it means a vendor is not actually involved. So it's like you are making a direct posting into your ledger account for your stock. You understand? So if you look at material, what's it called? Stock issue. So stock issue is the opposite of this. So I would say material receipt. Let me do material receipt. Then, so you could decide to pick a default warehouse. The essence of default warehouse is when you are creating the line items, it populates it. So let me just pick so the warehouse I want to pick is let's say who is borrowing us this. Let's say it's one gas. Let me just assume it's one gas. One gas is borrowing us this. Then automatically it brings out the warehouse for one gas here. So it's a receipt, and so I don't need source warehouse. So I don't need a source warehouse. So in a situation whereby the type here is transfer. when it is material transfer, you might need this. This is where this tool will be needed. But this time around, I'm just talking about material received. So in a situation whereby it is material received, this is the only thing that is needed. This is needed, and the product. So the product I have here is LPG. Now, what quantity do I need, or am I borrowing? Let's say I'm borrowing 30 kg. I'll just enter 30 kg. So you need to know the rate. So if you have a specific rate, otherwise what the system will do will be bring the last received rate for you. You understand? But let's assume you should know the value of what you are actually receiving from, or you are borrowing. You should know the value of what you are borrowing. So that's what the system is asking you here. Definitely your customer, your what's it called, your external parties might not tell you, or you guys might not even discuss the aspect of the value, because you are just concentrating on the quantity, because when you want to return, you are as well returning the quantity. But the system wants to be able to produce its financial reports and other valuation report. So the system will definitely ask you for the price, that is the cost price that you are using. So you should have an idea of what your cost price for this particular product is. So depending, so I can say the value, let's say instead of I'm using 550. You understand? Now here, this is also very important. If you notice here, this is a stock adjustment account. So we don't want to use the stock adjustment account. The reason why we don't want to use the stock adjustment account is that we want to be able to trace the transaction. We want to be able to reconcile this transaction seamlessly. So that is the essence why we created those ledger accounts. So what ledger account are we picking at this point? Remember, it is a received stock. So this will be this stock. There is a stock control account on this, which will be debited, which was what I showed you earlier on. That's the Calabar stock. So we have to be credited. We have a liability account, which I earlier showed you. So our liability account as at this point, I think is let me see from drop down. Clean this. Okay, from which of these party is involved? Let's say receive from Wongas, since we have picked the warehouse called Wonga. So I'll pick this. Then is that all? Then that's all. So all I just need to do is save this. Probably post it by submitting. So let me submit this. Yes. So this actually shows let me check the stock ledger and the accounting ledger. Let's start with the accounting ledger. So the accounting ledger would show that stock of Calabar is debited. Can you see? Why stock received from one gas is actually credited. You understand? So with that, you can easily know that, okay, this is what you collected from this particular party. Let's go back and check the stock ledger. So checking the stock ledger, hold on. So checking the stock ledger for that transaction, you can see cooking gas 30 kg quantity was received. Because I had some balances before, so that's why. So on a normal day, depending on what you have in stock, That is what you're going to have there. Then what else? I think that's all. Then it shows you the incoming rate, and that aspect is completed. Let's even look at let's look at it on our ledger account. Sorry, let's check our ledger account, chart of account. So let's see this current asset, account receivable. So you can see this value is under borrow stock to external. Borrow stock to external. Is it to external or from external? Yeah, this should be stock given to. I think there's no. This shouldn't be. Is it? No. I'm sure this is not the transaction we did, but let's just check to be sure it's not the transaction. No, it's not the transaction. That's not the transaction. So just to be sure that we're on the same page, that's why I opened that. Then let's check our stock entry. So stock of LPG, which is these. So let's check our stock of LPG. Stock of LPG. Sorry, I was distracted. So stock of LPG. Now stock of LPG, which is this. Now let's view this. So this is as at this date. So if I scroll down, so did I change it to training? So that, yeah, training. So which is this. So this is what we have. You can see this is appearing on our ledger account, just like we saw it the other time. So let's check the credit aspect. I think those ones, because those ones have balances, had some transactions on them before, you would now need to start tracing that. But let's look at the liability account for it. I think that's as no. Yeah, look at this now. So this is the stock received from one gas. So at a glance, I can actually, if I have balance here, at a glance, I can actually know that, oh, there is a particular value in terms of ledger account that I'm owing this one gas. You understand? I can actually. Now, how do you now utilize the product? So, you know, this aspect, you have only received the product. How do you now utilize it? There are different ways whereby you can utilize it. Is either you want to say, yeah, you are utilizing it within the same warehouse, or you want to transfer from that warehouse to the other warehouse. So that decision depends on you. But for Henico Global, for a simple process, I would advise that you should go into just the same stock entry we just did now. Stock entry. So for stock entry now, So just do another stock entry. This time around, what you are trying to do is that because you don't want to sell from that warehouse, the essence is not to sell from that warehouse. The essence was just to show that that particular product was borrowed into that warehouse. Now, so what we want to do is to transfer. So I'm using material transfer now to transfer where we make our sales. So how do we do that? So I'm using the same date. I'm using the same date, and I'm picking the warehouse. So the warehouse I'm transferring from is the one gas. That's the one gas, which is this. I'm transferring to here. I'm transferring to LPG tank. That's where the sales is made from. So I'll say this product, and I'm transferring at 30 kg. Look at what has happened here. Remember, when we received at what? We received at 550. Now, when we want to transfer, the system is bringing out 593. Yeah, for transfer of products, for transfer of items, for issue of products, you cannot change the rate. But for inflow, stock inflow, you can change the rate, as that shows that the rate at which is coming in. But the rate at which is going out, it's the system that will automatically determine it for you, depending on the costing method you are using. So is either you are using the FIFO, weighted average, but in this situation, for this client, we are using weighted average. So automatically the system, even though you enter anything here, for instance, if you decide to enter anything, let me just say 500. This here, the system will still take it back to what it's supposed to be. So let me say I'm transferring this, and this time around, what is the account? What account am I picking? What account am I picking from this level? Because this is transfer from this particular warehouse to another warehouse. So in this situation, I'm not supposed to even touch this. I'm not supposed to touch this. But for differences, now, so this is supposed to hold the difference. So if you have any difference in the account, where should it go to? So this is more like your variance ledger account. So where should it go to? So in this situation, you can decide that you want to still pick the same account here, so that you have what is it called? So that you don't start putting yourself under pressure or trying to know what. On a normal day, you're supposed to have a stock adjustment account for this in this situation, because whatever that you are bringing in is now different from what is going out. So in my whole situation, I'll put stock adjustment account. So let's say stock adjustment. So this is what I'll put here. Now, please take note. This is transfer from one gas to your selling point or your warehouse where you make your sales. It is actually different from when you receive stock. When you receive stock, it's requesting that you pick a difference account, and that should be the account we created that we explained earlier. But this situation, I didn't want to say anything about this, but for this situation, you can as well pick your stock adjustment here. You understand? So you pick your stock adjustments here, which is more of your cost, your sales, your cost of sales account. This is cost of sales account. You can just put there. So, but if you still want to maintain the same account, you can still maintain the same account that you chose earlier. But just note that you will always have a difference there. So, which means at the end of the month, you can now use your journal to transfer it into the stock adjustments account. But for my case, for this scenario, I'm not going to do that. I'm just going to put the cost adjustment here. Just take note of the process I've explained earlier. So I'll save this, then submit. So that account is what? Completed. The account is completed. So if I have this accounting ledger, yeah, because it's an in and out, so it's a zero balance. I think that's why it's not appearing here again. Let's see this stock ledger. So I expect it now to be inside the LPG warehouse. So it's leaving this warehouse. One gas, you can see quantity out is 30 and it's going into this. You understand? So now let's go and check that transaction is completed. Let's go and check. We've done stock transfer from one warehouse to the other warehouse, which is seamless, which is fine for us. So let's we shouldn't see much difference now. Let's see our, because that situation is more of you have to debit a stock account, which is your stock account, the same normal stock account, and also credit the same stock account. It's just a transfer of stock, so the ledger account is going to be the same thing. So but let's check so I expect the hoeing, you can see. So this is the year, which is actually very good for us. It's the showing that you are hoeing this product. Now, when you need to return the product to the customer, to the external party, so how do you return this product to them? So the same thing, the same way you receive the stock is the same thing you are doing. So you go to your stock entry, but this time around, instead of choosing material receipt, you are choosing material issue. So this time around, what I do is pick this. Remember, we're doing training, so we're training this to training. This network is slow, so let's do this. So this time around, picking material issue. So I pick material issue. So now we are issuing out from which we have. So on a normal day, let's assume you have received your purchase, you've made your sales and all of that, but at that period, you still don't have quantity to give to your external parties back. You cannot return them for now. When you receive your product, when you raise your purchase order and you receive your product, then you now decide to refund them or return. You want to return the stock back to them. So that is what we are doing in this case scenario. So in this scenario, you need to know where the product that you have received, where it is. So you might receive it, I don't know, you might decide that you want to receive, maybe you have received it into your goods in transit, then from your goods in transit you want to transfer to them directly, or you want to take it directly from the LPG tank. Let's assume that we are picking it from the LPG tank. So I'll pick LPG tank. I don't need a target warehouse. I explained to you that your target warehouse is only used it's only used when you are doing a transfer, which is these two. You can use your source warehouse and your target warehouse when you are doing a stock transfer, both of them. But in a situation whereby it is only the target warehouse you are using, it means that you are receiving stock. You are receiving stock. But when you are issuing out stock, you use your source warehouse. So in this situation now, I'll pick the LPG products. Now, what did I collect from there? I collected 30. Let's assume I want to return the whole 30. I'll just 30. You understand? Then, because this is also issue stock, so you cannot change this like I explained earlier. So now you are returning the product back to them. So you need to change this account. You are returning the product back to them, so you need to change this account so that it can go and debit that account you issued with earlier. So let's say this is what I mean. So I'll say stock received. Stock received from LPG, from one gas. So you are returning it back to one gas. So all you just need to do, definitely there will be a variance there. Why? Because when we received at 550. Now the system is telling you, based on the valuation of the product as at today, they are returning the product back. The product is no longer 550. The product is now 600. So who bear the loss? So in this situation, let's assume I'm putting 550. The system will still change it back. Understand? So let's say save this guy. You can see the system will definitely return it back to 600, because when products are supposed to be issued out, the system determines the price at which it will be issued out based on costing method, inventory costing method. So it's going to utilize that. So this particular database is on weighted average. So the system has computed at this point that the weighted average of this product as that when you are capturing this transaction is 600 naira. And when we captured it earlier, it was 550. It's 550 because you are bringing in the item. But when you are issuing out the item, it is what the system calculated, not what you calculated or what you are given. So at this point in time, I say submit. Then I say yes. So I expect to see a variance of that 50 naira. You understand, on the ledger account. So if I decide that I go to the ledger account to check my stock ledger account, so this 30 naira has been issued out. You understand? It has been issued out. Then here now, that's the accounting ledger. So if you check your accounting ledger at this point, you can see 18,000 and the other one was 16,500. The other one was 16,500. So it's more like uh, there is a difference of like 1.5. Yeah, there's a difference of like 1.5. So what do we do in this situation? It's your loss. At times it might be your gain. So in that situation, you need to move the value, the balance in your stock ledger account, and take it to your cost adjustment account. So let's look at this. I'll pick let's go back to our open ledger. So that's sorry, chart of account. Let's go back to our chart of account. Then let's see what we are owing. So at this point, you can see that there's a difference of 1.5, and it was as a result of valuation. So it's as a result of valuation. So you now need to raise your journal entry. Raise a journal entry by crediting this account with 1.5 and taking it to your cost, your stock adjustments account. So if you look at your cost adjustments account, so looking at this, you can then now move it to this account. You understand? So that shows that the products, that particular, the difference between both of you is being cleared. So that aspect is closed. The same scenario too goes when you are the one borrowing. No, okay, we just finished the scenario where you borrowed from them and you return the product to them. So the same scenario goes to when they come to you to borrow the product. So it's still the same stock entry. So I'll just go to my stock entry, but this time around, so the same scenario comes there because you are the one giving to them. So you are taking your product out. So when you're taking your product out, I use the word called what? Material issue. So you are taking the product out to them. You understand? You are taking the product out to them. So I don't make mistake. Let me just do training. Click training. So because you are the one issuing out, so where is it coming from? It's coming from a warehouse, which is a source warehouse. Let's say LPG, because you're not selling to them. There are processes whereby it could be that whatever you borrow from them, it's not even borrow, you sell to them or they sell to you. So in that situation, you only sell and everybody goes. They make their profit and you also make your profit. So this is it. So at this point, you are the one issuing out. So the system will pick the account that you are using to issue out, or pick the cost at which it is going to use to issue out. Then as well, the account you are supposed to pick here, the account that you are supposed to pick here is what? Now, because you are the one giving out, you are giving out to them, so you are supposed to see something like stock given to one gas. If they are the one receiving from you, you are using stock received from gas. But we are using stock given to one gas. This is a situation whereby you are the one giving to them, and when you are giving to them, you have material issue picked. You understand? So you have material issue picked. So when they are also returning to you, Maybe after issuing out this, you don't need to transfer, do a warehouse transfer in this process again, because you have issued out the material to them, and that's all. So you can print your document to show that, okay, you issued out this particular product to them. You have issued out to them. You have given them the product. So when you give them the product, you pick material issue, then to make sure that the ledger account that you are picking here is stock given to. I try as much as possible. I didn't want to make it complicated. I would have used maybe stock liability payable, while the other one receivable. You understand? But we want to make sure that it is very clear and understanding to the user. So in this situation, stock given to one gas. This is for a scenario where you are the one giving them. So, and it has to be material issue. Then you post it, and that's all. By the time you go and check your ledger account or your warehouse, your stock ledger, you will see that you will have minus this quantity that you have issued out. Why the balance is on this general ledger account. But when they are supposed to now return the product back to you, after you have posted it, so you are using the same document when you are supposed to return the product back to you. So what you are doing is that you are changing this. You are not using material issue again. Now you are using material receipt. And this account must be this account as well. That is, this is the ledger account. What you gave to them, they are now returning back to you. You understand? So this also, when you change that, then you also need to change this. You understand? So you also need to change this. So that is when the products can come into the system. So I think that is done. And thank you. If you have any question, please let me know. So thank you. Bye.